Okay, here we go. Short-term view of the stock market. We're going to look at the S&P 500 SPX, and you will see in here as I switch over from the bond market, which is still there, over to the S&P 500. The analytical style on here is slightly different right now when we do this, because we've broadened it out a little bit with more information, which then shows you the beautiful cycle structures that are in here, and then gives us even a better sense about which of those channel areas, the top or the bottom, it's trading in. And when you get a significant breakdown, as we've had right over here, where I'm just going to look at these last two cycles right over there, this breakdown right over there is just a very, very key piece of information. What it says is that this cycle right over here is not bottomed yet. And it points out over here to somewhere around the 6th to the 8th, let's just say, of October, before this cycle is over with. And we are in a declining phase. We think we're in a little rebounding period right in here, and then coming down. So this is really, really a very bad pattern that we're looking at. It is the kind of pattern that brings free fall markets. It could just move sideways, of course, and come down and test this low and get back down to about 32.10. That would be a best case that I could make. The likelihood over the next 2 weeks, 1.5 to 2 weeks that we see in here, is that a little bit more chop, it maybe could get to that 33.04 to 33.28 sell area, but then again, maybe not. And there is a possibility for some very large down days in here. What we're looking for, you can see the black arrowed one, is what we consider to be the highest probability that we trade in that shape that we see in here, and then down. This fib extension, the bottom of it right there, is around 31.50. That to us is a reasonable target for the downside right now. That's about 120 points in the S&P down over this next week and a half. There's an outside chance here at about 30.60. We don't think that is likely, which is 30.57. That's the support from the weekly chart. And you can see very clearly we're trading in this downside cycle in the lower half of this cycle. It's really a very negative situation. Momentum has turned negative in here. All time frames are now negative in these indexes, and that is a really poor condition. When that happens, well, the sum of the evidence is that the cycle structures are very negative. We believe, based on what we showed earlier in the show, that the bull market is over, and that there will be some rallies that look pretty good, and we don't think that's going to come until sometime out over here into October. And even then, we think those rallies are going to fail in a big way. We think that the biggest surprises are going to be on the downside. You see the way we came off the top right over here, and you see the way we came off the sell zone right over here. We think that you're going to see more of these days coming up here. We did some very deep analysis in Futures Speak on Wednesday. If you take our trial, you'll be able to see what we said last week, and you'll be able to see what's coming up in the next week. So we're going to continue to do this deep analysis. We update these all of the time for our members, so they really get a sense for market conditions. These are very bad conditions, and we can only say when we see this type of setup, which is very mechanical for us, that there is a ton of downside risk that we see, and the upside is limited. Remember that financial chart that I showed you in Europe and in the United States, and all of those major reversals. If you're just watching the S&P clip here, go back and watch that in the show, and you will see what I'm talking about. There is risk here, and I would make the risk rewards right now about 4-to-1 on the downside based on what I'm seeing in here. So it's pretty bad. A multiple time frame bias is negative. The cycle structure is negative, and that's what we're looking at here. When you get in those conditions, you have conditions for a lot of downside risk. S&P 500, we're looking for only some sideways chop, minor upside potential, and big downside potential based on what we see here, looking out over the next 1.5 to 2 weeks in there. So I say, make caution is important in here, especially on the long side. That is a look at the S&P 500 and our short-term view for the stock market, the S&P 500. That's it for the whole show. If you did not see the beginning of the show, go back and watch the important thing I showed you on the market leaders with all of those massive reversals. Go back there and watch all of that. I think it's very important information. I think it's really time to consider long-term allocations. And if the market gives a gift to move to the upside, well, I think that is a gift that should be taken.